Bismillahirrahmanirrahim. Ladies and gentlemen, distinguished guests, participants who are joining us online for today's session, and members of the overseas Pakistani community around the world. Assalamu alaikum. I'm your host Farhan Ahmed, and on behalf of the Overseas Investors Chambers of Commerce OICCI, Faysal Bank and Meezan Bank, I would like to welcome you all to today's webinar, which is titled Your Gateway to Seamless Investment. The Roshan Digital Account, or the RDA as we call it, has emerged as one of the most successful and most impactful financial success stories in Pakistan. And this could not have been possible, of course, without the visionary leadership and the facilitative role that the State Bank of Pakistan has played. The SPP has not only enabled the product, but has also encouraged banks and other institutions to have roadshows and webinars like we have today for all of you, to actually spread the knowledge and share the benefits of the program with the Pakistani diaspora around the world. So today we're very happy because we're entering what is called the RDA 2.0 phase, and we have the privilege of having some of the country's most respected leaders from the banking, the investment, and the financial policy here with us today to share with their perspectives on what RDA 2.0 is all about. The event, like I said earlier, is being live streamed on the Meezan Bank, the Faysal Bank, and the OICCI, as well as the Nutshell Communications social media handles. So I have two requests from the people who are watching us online right now. Please leave your questions in the comments in the streams that on the social media handles, and our representatives here will take these questions. For our guests here in the hall today, we have notepads and pencils available. Please write down your questions and share them with us, and then we can pick and choose in the interest of time. Some of the questions we will ask in the Q&A session. Those questions which do not get answered here today will be responded to by the bank's representatives in the coming days, inshallah. So thank you all once again for joining us, and let us begin today's proceedings. To formally begin today's proceedings, I would like to invite Mufti Uwais Yunus to recite verses from the Holy Quran.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم يا أيها الذين آمنوا اتقوا الله وذروا ما بقي من الربا إن كنتم مؤمنين فإن لم تفعلوا فأذنوا بحرب من الله ورسوله وإن تبتم فلكم رؤوس أموالكم لا تظلمون ولا تظلمون وإن كان ذو عسرة فنظرة إلى ميسرة وأن تصدقوا خير لكم إن كنتم تعلمون واتقوا يوما ترجعون فيه إلى الله ثم توفى كل نفس ما كسبت وهم لا يظلمون صدق الله العظيم.
Jazakallah khair. Can I please request everyone to please rise for the national anthem?
سرزمین شادبان हसीन शादबाद तू निशाने अज़्मे आलीशान अर्ज़े पाकिस्तान मरकज़े यकीन शादबाद पाक सरज़मीन का निज़ाम क़ुव्वते उख़ुव्वते सल्तनत पाइंदा ताबिंदाबाद शादबाद मंजिले मुराद परचमे सितारा ओ हिलाल लाबरे तरक्कियों कमाल तर्जुमाने माज़ी शाने हाल जाने इस्तिक़बाल
Thank you. To formally start the discussion today, please welcome our first speaker. He is a leading banking and financial sector professional with extensive experience across corporate, commercial, and investment and Islamic banking, and has played a prominent role in shaping strategic initiatives within Pakistan's banking industry. As President and CEO of Faysal Bank Limited, he has been driving the bank's growth, digital transformation, customer-centric innovation, and expansion in Islamic banking. Under his leadership, Faysal Bank successfully completed its transition from a conventional bank into a fully Islamic bank, recognized globally as the largest Islamic banking conversion undertaken in the industry. He currently serves as president of OICCI and vice chairman of the Pakistan Banks Association, contributing actively towards strengthening Pakistan's financial sector, investment climate, and the broader economic agenda. Ladies and gentlemen, please join me in welcoming Mr. Yusuf Hussain, President and CEO of Faysal Bank Limited and President OICCI, for his opening remarks.
Thank you very much. Assalamu alaikum and a very good afternoon. Distinguished guests, respected speakers, members of OICCI, colleagues from banking and investment community, ladies and gentlemen, it is really a pleasure to welcome you all to today's session. On behalf of the Overseas Investors Chamber of Commerce and Industry, I would like to particularly welcome Dr. Anayat from the State Bank of Pakistan, Dr. Syed Amir Ali from Meezan Bank, and my friend Imtiaz Gadar from Al Meezan Investments, and all the participants joining us physically and virtually. Today's discussion, Your Gateway to Seamless Investment, is both timely and relevant as Pakistan's financial and investment landscape space continues to evolve in a more digital, structured, and globally connected direction. As an institution representing leading foreign investors in Pakistan, OICCI strongly supports such initiatives as Roshan Digital Account to facilitate formal capital inflows, encourage long-term investments, deepen financial markets, and strengthen Pakistan's overall investment ecosystem, which is a common agenda with the industry and the government of Pakistan. In this context, Roshan Digital Account initiative has emerged as one of the most impactful financial platforms introduced in Pakistan over the last many years now, with nearly 930,000 plus accounts and cumulative inflows approaching north of $12 billion. RDA has significantly improved formal financial channelization while creating a convenient, credible, and digitally enabled investment gateway for overseas Pakistanis to invest in Pakistan. Importantly, RDA has evolved from being primarily a remittance-linked initiative to a broader investment and wealth management platform. Investors today have access to a growing range of opportunities, including capital market instruments, mutual funds, pension funds, and real estate opportunities and other financing avenues such as term deposits, and of course, ethical and Sharia compliant investment solutions through the fully digital channels enabled by the banking sector and the State Bank of Pakistan. The State Bank of Pakistan deserves considerable appreciation for maintaining consistency, credibility, and regulatory support in developing this ecosystem. More recently, the expansion of RDA framework to allow onboarding of a wider set of non-resident participants, including foreign individuals and corporates, is another important and forward-looking development. This materially enhances Pakistan's ability to attract a broader international investor base through a more regulated and digitally enabled investment framework. Investor confidence, I must say, ultimately depends on both the experience and economic fundamentals. Ease of onboarding, operational efficiency, digital convenience, and the established track record of swift outflows and repatriation as and when required have been key strengths of the RDA proposition. Encouragingly, in the last 2 years, Pakistan has witnessed improving economic stability along several key indicators. Inflation had moderated from earlier highs. External accounts have become relatively much more stable, and engagement with international financial institutions continues to provide an important anchor for macroeconomic discipline and investor confidence. At the same time, the recent uncertainty in parts of the Middle East region also appear to be gradually settling, and hopefully its impact on Pakistan's economy will remain limited and short-lived as the country continues to move forward with prudence, discipline, and responsible economic management. In this environment, I must compliment State Bank of Pakistan, which has continued to play a prudent and responsible role in maintaining stability and orderly market management. Pakistan's geopolitical and geo-economic position has also strengthened, reflected through improving global engagement, increasing access to markets, and successful participation in international capital markets, together with improvement in our credit rating, and including initiatives such as the Panda bond recently. These developments reflect improving external confidence and growing recognition of Pakistan's medium-term economic potential, creditworthiness, and economic stability. I'm confident that today's discussion will provide valuable insights into investment opportunities, market outlook, and the evolving role of financial institutions within Pakistan's ecosystem connectivity with the global world. Thank you once again for your participation and engagement, and I really look forward to an insightful session ahead. Grateful.
Thank you very much, Yusuf Hassan Saab, for brilliantly setting the tone on this, and I completely agree that for long-term investments, it is, jaisa ki aapne kaha, the three C's which are important, which is the confidence, continuity, and consistency of policy. So moving forward, ladies and gentlemen, our next speaker is a highly respected corporate leader who has played a pivotal role in the expansion of Islamic banking in Pakistan. He is a Harvard Business School alumnus, a CFA charter holder, and a chartered accountant gold medalist. He also holds a PhD, an MBA, and an LLB degree, and has also completed a certificate in software engineering. He is currently steering one of the nation's premier financial institutions, which is Meezan Bank Limited, as President and CEO. Please, I would like to request Dr. Syed Amir Ali, the President and CEO of Meezan Bank, to share his views on the RDA 2.0 proposition.
Thank you so much. Bismillah ar-Rahman Rahim. Respected Dr. Inayat Hussain, Mr. Yusuf Hussain, Mr. Aleem, Mr. Imtiaz, respected participants, ladies and gentlemen, Assalamu alaikum, and a very good afternoon. Probably in some part of the world it's evening and morning also. So good morning and good evening to those participants also. So there is a short presentation. Can I have the presentation? So it's the value proposition of RDA was actually outstanding from day one, and it was breaking the barriers even at that point in time for a country which has always been an exchange controlled environment. So we broke the barrier, but I think this time it is truly a leapfrog, and a leapfrog, and it's truly 2.0, whereby now the non-resident and the foreign entities are also allowed to have repatriable foreign currency accounts in Pakistan. Okay, thank you. So my colleague Yusuf Hussain has covered all these numbers very well, and these numbers simply prove the success of this initiatives. So proof of the pudding is in the eating, and alhamdulillah, the economy of Pakistan is enjoying the fruits of this outstanding initiative of State Bank of Pakistan, and you can start your RDA journey today. So it's a matter of 48 hours to have your RDA account opened. Within 5 working days for corporate entities without any physical presence in Pakistan, without visiting Pakistan, they can have their account opened. This definitely entails the necessary KYC and due diligence, which is a regulatory requirement, not just in Pakistan but internationally. But with all these steps, Pakistani banks are fully geared and enabled to onboard the customers, which are actually corporate entities and business entities across the globe within a period of 5 working days. Key features of the RDA for individuals, and of course for this session which we are holding in OICCI, so more relevant aspect of RDA here is the RDAs for entities. So it's an end-to-end digital onboarding, and then you have access to specifically investment products. For individual, there is an availability for financing products, and then these investments are backed by Government of Pakistan, and the way these investments are managed, that you can redeem it at the counter of on their due dates at the counter of State Bank of Pakistan. So naturally there is a backing of Treasury also in addition to the Government of Pakistan. Funds are fully repatriable on no question asked basis, and most of the banks now have dedicated relationship managers. So now it has been an established line of business for all the banks like Meezan Bank, Faysal Bank, and all other banks. So you have a dedicated relationship manager which is available, like in case of any corporate relationship. Who can open this account? So the first line, of course, is how it was started. Initially started for non-resident Pakistani individuals, and for that I think the provision in the regulations was there. It was activated with some improvement, but now something which unique has been recently done was changes in the regulatory framework allowing foreign nationals to have this account in Pakistan, and that too digitally. So probably there is a foreign national who has never visited Pakistan, want to explore investment opportunities into Pakistan, want to bring in dollars, and also can take those dollars back or foreign currencies back. So this is a very interesting value proposition. And then more so for the foreign entities. So these are the entities which are registered or incorporated outside Pakistan in any jurisdiction. So there is no restriction on the jurisdiction where these entities are incorporated. And this is the pictorial explanation, because there must be a lot of questions which must have been coming in the minds of the participants here. In the middle there is a foreign entity which is registered outside Pakistan. So in terms of the ownership of that entity, the entity could be owned by a foreign national or a foreign entity, and it could be owned eventually by a Pakistani national. So there are entities in Pakistan, for example, which have offshore entities. We know there are cement companies in Pakistan, there are textile companies in Pakistan, which officially have their offshore entities operating outside Pakistan. So then they have an entity which is registered outside Pakistan, owned by a Pakistani. And if we look at which type of entities are eligible, though they are incorporated outside Pakistan, to have this account, which is a fully repatriable account, those who are operating outside Pakistan. Those who are operating inside Pakistan, they are like a permanent establishment. So this facility is not available to them because there are so many other facilities which are available to them. So this is the explanation of what you can do and what you cannot do. But this is truly a leapfrog in terms of the exchange control regulations of Pakistan. Onboarding is very simple. You go to website, select account type, fill form, upload documents, and here you go. So your account is active. And then what you can do with these accounts, so there is a very attractive, I would say, investment value proposition which gives return even more than our Euro bonds and Panda bonds. So Panda bonds have a very low return because of their backing by a multilateral agency, but let's talk about the Euro bond. It gives you a better return than Euro bond. So it's on dollar, the profit rate is up to 7.75%, and we will look in the next slide what are the other rates available. Then you can invest into equity market. Earlier there was only one option for a foreign entity or a foreign national to come to Pakistan, was through a Sakra account. But as soon as you bring funds into a Sakra account, whether you are invested or not, you have to convert into rupee. Now you can hold your fund in dollars in Pakistan, and you can then invest into equity. So your conversion into PKR will be time to time, of course. When you want to invest in equity, you can invest in mutual funds. And then, of course, you can also invest in other government securities which are available, which includes government bonds and sukuks, and bank deposits, of course. So you can keep your funds in bank deposits, you can earn return on them. And for individuals, there are already two products which are available, which is for house financing and which is for car financing. So although these products are right now not available for foreign nationals or entities, but these are the products which are available, and there is a very good pickup of these by the non-resident Pakistanis. Naya Pakistan certificates, a very, very unique concept, I think. And this is, as my colleague Yusuf told you earlier, all our initiative about bringing foreign currency into Pakistan was like a remittance. You bring money in, you convert in, and you take, you cannot either take it back, or if you come through a Sakra account, then you can take it back, but you have to convert into PKR. So these are dollar bonds actually. So you can invest in different tenors. No approval is required for repatriation, and the withholding tax regime is also very simple. So it's flat 10% deduction. These are the profit rates which are available for different tenors and for different currencies. So if we look at the profit rate for PKR, they are also very, very attractive. If you convert money and invest in PKR for 5 years or even for 12 months, if you take a shorter view, it's 12.25%, and for dollar, it's 7.25%. And if we look at the comparable returns which are available to these entities in international markets, if you look at that, so our Naya Pakistan certificate, dollar certificate is giving a return of 7.25, GBP is giving a return of 7.5. But if you look at GCC sovereign sukuk, if somebody is investing over there, it's 4.5. And mind it, these NPCs are also sovereign bonds. So these are not corporate bonds or bank bonds, these are sovereign bonds. UK 1 year fixed saving 4.6. So whichever way you look at it, the return on comparable securities available for the foreign entities to the individuals is fairly less than what is available on these Naya Pakistan certificate. Even it is less than the Pakistan own Euro bond, which Pakistan issued at roughly 875, 785 or 875%. Yeah, 6.875% recently. Uh, Roshan Equities, I think my colleague Imtiaz will cover that in more detail. So these are, as soon as you have your account, you are ready to invest and trade, but let Imtiaz cover it in more detail. Roshan Apni Car, you can finance a car here in Pakistan. So it's also a very interesting value proposition for individuals. And earlier there were very few institutions who were offering a financing facility for non-residents, but now it is available, interestingly, but of course not for the foreign entities. And then Roshan Apna Ghar and Roshan Apni Car, the same products. Income tax. The income tax on RD is very simple. So if you invest in Naya Pakistan certificate, I told you it's flat 10%. If you invest in government bank deposits, so there is no withholding tax. And if you invest in equity markets, there are different equity market withholding taxes rate. But of course, these rates are withholding taxes rate, and these are subject to double taxation treaties between Pakistan and the entity, between the country of origin of that foreign entity or foreign individual. So tax advice is of course required before you take a view on the tax rates applicable here. And this is it. So this is the all the features of RDA. Tried to, because nutshell is helping us, so I tried to also try to cover it in a nutshell manner. So, but we can answer any questions at a later stage. So thank you so much.
Thank you, Dr. Syed Amir Ali. I think that was a very elaborate and a very comprehensive walkthrough of what RDA 2.0 has to offer, and I'm sure our viewers who have joined us online as well can greatly benefit from this in order to develop a further understanding. So, having understood what the product is, we would now like to move on to our next speaker. Our next speaker will talk about how we will create wealth. And as Amir Saab said, that he will talk into more details on how capital market works and what they are, and he will talk and he will help us understand how the wealth creation will work for RDA clients. And he's a veteran in the capital markets industry. He as a CFA charter holder and is currently the CEO of Al Meezan Investments. He brings unmatched expertise in fund management and investment strategies. Ladies and gentlemen, please welcome Mr. Imtiaz Gadar to share his views.
Yeah, am I audible? Yeah, can we also have the presentation? This one's for taking forward. Bismillahirrahmanirrahim. Assalamu alaikum and good afternoon, everyone. Thank you so much, OICCI, for this opportunity. In terms of speaking just about the macro landscape before we start talking about the investment potential, just to lay the groundwork for it. So I think if one was to look back at the last 36 months, the way we look at the Pakistan story, it's definitely been a resurgence story. From the lows of June 2023, I think a combination of getting our macroeconomic priorities right, sticking to a policy direction that we had committed to, and obviously being helped by geopolitics, especially in the last 12 months, has taken us to a stage where the investor confidence has reflected the achievements that have happened in the last 36 months. I'll go into the details on subsequent slides, but in a nutshell, taking a word from Amir Saab, in a nutshell, what has really happened in the last 3 years is that we've come out from a stage where we were talking about economic survival to definitely a stage where we can talk about stability. Now comes the next stage, is where we have to try and transition from stability to growth. We've seen in pockets that attempts are being made. We are looking at different options, but you can't really blame that in the last couple of months. You have to take a stock of the situation and again decide when do we press the paddle. So I think that's where we stand right now. Just very quickly, in terms of the numbers, what lets us believe that, that resurgence has happened to a certain extent, but this next phase has to be planned very meticulously. So, in terms of taking the numbers that have really headlined this resurgence all over the international press as well, obviously the number one is how the CPI has been controlled. It was 30% plus in 2023. Today we are talking about single digits. Yes, there will be short-term spikes because what is happening in the world. And also, I think what is very important for us as market participants to keep an eye on, that there's been a visible decision made that we want to have fuel available in the country. Now, that's a decision that a lot of countries in the world have taken. We very clearly taken that decision when prices are at $100 a barrel. That is obviously, that decision has its own merits. But obviously, it will come at some strain to the CPI, which will need to be managed. So that's something that we'll need to keep an eye on. Similarly, on the reserve side, being at a stage where reserves was just enough to cover 3 weeks of import, alhamdulillah, we are in a much better position now. Not ideal, but again, a better situation where we are covering 3 months of imports. But the next leg now is to obviously make sure that the quality of improving reserves from here also tilts more towards investments, while we navigate the short term through the debt-related flows. Similarly, for the current account, I think the way we have ensured that our exports and remittances continue to cover the import bill, that has again been a headline story by bringing current account deficit from 5% of GDP to close to 1% of GDP. That, on the flip side, has obviously meant that growth has been taken lower on the priority scale. But again, I think that, as I spoke on the previous slide as well, that is really the next stage where we have to plan that how do we graduate to the growth stage without overheating the economy. And finally, the one thing that is talked about a lot is obviously the fiscal side. In terms of the primary surplus, the fact that, where we were 3 years ago to coming to a stage where today we can, alhamdulillah, report a 2% primary surplus, that's been a good achievement. But having said that, again, in terms of how do we make this sustainable, how do we go to the next step, is to widen the tax base and, reduce the reliance on indirect taxation and levies and go towards the direct taxation and a widening of the tax base. This resurgence that has come obviously also has to be seen in the backdrop of the landscape that is available to us. So it's a very interesting landscape in terms of businesses that are investing in Pakistan. There is the headline numbers in terms of the population. There is this number about the youth bulge, 2/3 of the population being less than 30 years of age. And then there's the reported per capita income, which paints a picture that this population needs a solution in the longer term where we need to navigate it better. But there are factors on the flip side that if you judge the purchasing power or the resilient demand in Pakistan, not through per capita, Aleem साहब आपका ये argument थोड़े दिन पहले मैंने सुना था, मैंने यहाँ पर copy कर लिया. So it's not just about per capita that's reported, but you have to look at it from the lens of the purchasing power parity as well. You have to look at the resilient demand. The informal economy, yes, it's not something to be too proud of, but it is a reality. And that is something that seeps into when we talk about growth. You add to it the digital leap, where people of all strata, all kinds of people getting access to internet and connectivity, obviously that's opened up many more new avenues. And hence what you see is that despite having all of these structural challenges, what you see that there is significant growth, and companies have proven with track records in terms of profitability and cash flow growth that is there to be had. This whole landscape has is now faced with a very unique opportunity. We've always talked about Pakistan's position from a geographical perspective. Yes, we are surrounded by 4 very hyperactive neighbors, and we're in the midst of a position in the middle of a very active global region from a next 20, 30-year perspective. But what has happened in the last 3 months is this position is now not just geographic, it's also a diplomatic position. I was discussing with an international investor just 2 days ago, and he said, it's very interesting that every international investor in the world now knows what Serena Hotel is. Everybody knows that there is Islamabad, everybody knows there's a Serena Hotel. Now, this is the kind of visibility probably we've not had for years. Combine that with the fact that we have been a classic emerging market. But what has happened in last few months is that a lot of the developed world has started acting like an emerging market. You look at the way, tariffs have become a weapon, how trade has been weaponized, how, supply chains are being disrupted. That is also a very unique opportunity where the only thing you need to do is come across more rational than everyone else. So that's not been our forte over the years, but what has happened is that a unique opportunity comes up because now everybody is acting in a very different way. Just getting that act together, showing relative stability, I think that presents a very big opportunity in terms of attracting capital while the world sets a new equilibrium. So again, when we look at Pakistan, when we talk to investors, investment case is still robust. I think the challenge that we face is usually the narrative case, is where we start losing out. So just to address some of the myths, I'll discuss this with numbers in the next couple of slides, but just to put this in perspective, there's a lot of things that we hear that political noise is what really will dictate corporate performance. If you look at the years, if you look at different cycles, what we realize that faces eventually do not matter. It is really the macro stability that becomes the holy grail, and that's what drives corporate performance and asset prices. Similarly, for valuations, we get a lot of arguments that market, especially the PSX, KC 100 has gone from 40,000 to 170,000, 180,000. So maybe valuations are not, worth it anymore. But what we do not realize is that there were two things. One, the lows that you were coming off from and the corporate profitability performance, our multiples are still at a discount to the region, and they're still at a discount to our long-term averages, which I'll discuss in the next slide. Similarly, another thing we get is usually that, if you look at it from an Islamic angle, because especially the overseas investors that we have, they usually have this inclination that they have to look at this angle, that Islamic investments might be underperforming because there is limitation. Numbers suggest something completely different. Similar for currency risk. Again, another headline argument that you get when you're talking to international investors, that what's the point of your PKR returns, is everything is going to go away in devaluation. Fact check, it has not. It's just coming up front. And similarly for the inflation side. So if you were to look at all of this in numbers, we've given different time frames. Usually people say that you guys use a timing bias in terms of presenting a better picture for PSX, but you look at a 1 year, 3 year, 5 year, whatever CAGR you look at, the PKR returns have been very, very solid. And as I was saying, even the price earning multiple, even now it's at 7.6 times. And you look at the region, you look at MSCI, FMS at 14. So we have a lot of room to go. What has happened in the last couple of years is that market has repriced us on reforms, but the reforms are not completely done as yet. There is a reason that the market is still giving us a discount compared to the other markets. So the message here obviously being that if the reforms continue, there is no reason why this market should always be talked about from a lens of 8 times or 9 times or become very expensive at 10 times. So I think that's another theme one has to keep at. The Islamic returns that I talked about, the KMI 30 has interestingly outperformed the KSE 100 since it's been inception, and the dollar argument. We've looked at dollarized returns. KC 100 has outperformed MSCI FM on all time frames, 5, 10, 15 years, despite all the devaluation we've had. So PSX still gets some headlines, but one area that's generally not discussed with international investors is Pakistan's debt capital markets. I think even in terms of the debt market, not just the returns that we have to offer, but also in terms of some of the advantages that it gives, that if you have to play the Pakistan credit risk story, people generally talk about Eurobonds, especially on the international front. But there are challenges in terms of ticket size, access, availability. But here what you have is a complete advantage. Just look at the ticket sizes that are available in the government securities market, whether it be the conventional or the Islamic market. I mean, to buy a $100 million ticket size is not a problem at all. It's not that easy to do it for a Eurobond. It's maybe not even that easy to do it for equities. But here the market has a lot of depth and it's got certain advantages over other avenues that are available. So international investors should definitely look at the Pakistan debt capital markets as well. Moving on, obviously, one of the things that I was supposed to talk about is obviously mutual funds. So the first part that I spoke about was the macro story. So there are two routes now. One, as Amrita was saying, so if you own the Pakistan macro, if there is a conviction that, okay, Pakistan is on the right path and I need to own a piece of Pakistan, the options are available through the Roshan equity, for example. The way that operates is that you get hooked up with the broker, you decide which stocks you have to buy, that order goes through, it's very seamless. And the repatriation, again, because of the RDA, is fairly seamless if you want to do that route. But again, not everyone has the time or expertise. If you are a retail investor, you might not have the time and expertise to dedicate what is required to understand the Pakistan market. Even if you're a corporate, you invest in multiple markets, you might or might not want to dedicate a team that looks at Pakistan and understands the nuances. So there you have the option to delegate the micro. You have to be convinced on the macro. For delegating the micro, obviously you have in emerging markets like Pakistan for volatility, inflation, execution risk, the mutual funds do step in. You get a full bouquet in terms of where you want to position in terms of the risk return profile. Just like any other market, the more risk you take, obviously the more returns are there on offer, and the market is evolving. For RDA holders, obviously it's a very seamless journey as well. If you're an RDA holder, you have that option that if you want to do direct equities, Amir Sahab alluded to it. If you want to do it through the mutual funds, that option is also available, that you pick the mutual funds that make sense to you and meet your risk appetite. So In a nutshell, the Pakistan investment story is there. The narrative story has been the challenge. The narrative story is presenting an unprecedented opportunity to be changed, and I think that is an opportunity that needs to be cashed on. A piece of Pakistan needs to be owned by the overseas diaspora, as we say that you send the remittances. It's also time to own the Pakistan story and become part of the researches that is happening. So thank you so much.
Thank you very much, Mr. Imtiaz Gadar. I thank you for that very insightful and in-depth look into the debt markets and the capital markets, and very rightly said, it is a resurgence, and let's try and own the narrative and move things forward for Pakistan. Our next speaker, who I would like to invite today, is, he is the session chair, and he will help us anchor the expert decision. And it is my absolute honor to invite, he's representing the central bank, and he oversees the core pillars of the nation's monetary architecture. As the executive director in charge of banking, financial markets, and reserve management at the State Bank of Pakistan. Ladies and gentlemen, I would now like to request Dr. Inayat Hussain to deliver his address.
Mr. Yusuf Hussain, Dr. Sayyid Amar Ali, Mr. Imtiaz Gadar, ladies and gentlemen, distinguished guests, both who are attending this session in person and those who are attending online. Assalamu alaikum and good evening. And as Dr. Sayyid Amar Ali said, that maybe at some places it may be good morning or good afternoon. Let me first thank the OICCI for organizing this session, and also thank Yusuf Saab, Mr. Amir, Meezan Bank for inviting me here as well. Mr. Imtiaz did share some of the economic numbers, and I will not like to diverge on that a lot, because I understand that most of you who have been operating in Pakistan and their affiliate and head offices abroad, they have more or less information about the broader macroeconomic picture. So I will try to keep it short so that we also have some room and time for question and answer session. So we did pass through a very turbulent period during FY21 and FY22. And as Mr. Imtiaz explained, our inflation touched a peak of 38%. Economy contracted by minus 0.2% in FY22. Our reserves touched a low of about $3 billion. And of course, there was lot of concerns, even the concern that Pakistan may default. But a good number of macroeconomic policies, both employed by State Bank of Pakistan and the federal government, have resulted in a stable macroeconomic situation as of now. So our inflation, as Mr. Imtiaz also explained, has declined to single number. The projections that we shared with the stakeholders about inflation at the start of this year was that in FY26 the inflation would be, average inflation for FY26 would be in the range of 5 to 7%. We are still reasonably confident that despite the recent upticks because of the Gulf crisis, we would still end this financial year within our target range, that is 5 to 7%. Going forward, we do expect that the inflation may pick up, may even hit the double-digit number, and that is one of the reasons that in the last Monetary Policy Committee meeting, it was decided to increase the interest rate by 100%. So We are committed, and as well as the MPC, that is the decision-making authority for monetary policy, we are committed that the inflation has to remain under control for a sustainable economic future for Pakistan. The GDP, as I explained, that was minus 0.2% in financial year 22. It gradually picked up from minus 0.2 to 2.6% in next year, 3.2% in FY25. This year, as you would have also noticed, that the GDP that has been the fourth quarter is the estimation number, but for FY26, the GDP announced by the government is 3.7%. There is a possibility that it may be slightly revised upward as well, and the number most probably would have been more than 4% had we not hit this turbulence because of the Gulf situation in the last quarter. The current account deficit that we projected at the start of the year was 0 to 1%, within the range of 0 to 1%. During the 10 months for financial year 26, from July to April, our current account deficit stands at $252 million. So again, we are reasonably confident and sure that the current account deficit, despite very substantial increase in oil prices and a hefty increase in freights and insurance charges, we still are confident that the current account deficit would remain within the range that we announced at the start of the year. Our reserves, as I just mentioned, that touched a low of around 3 billion, have increased. During the last week after the receipt of funds from IMF, our reserves have exceeded $17 billion. And the reserves have continued to increase for last, since we touched the low of 3 billion, the reserves have consistently increased, despite the fact that during certain periods we have to make very substantial debt payments, and the inflows were not sufficient to balance those outflows. But since, because of the current account surplus in the previous year and the good inflows in the FX market, we have been able to make consistent purchases from the FX market. So far we have, and we disclose it as well on our website on monthly basis. The latest figure that was released was of January 2026, and up to January 2026 we have purchased about $13 billion from the FX market, and that has played a very key role in augmenting our reserves. So a substantial part of our reserves are not the borrowed funds, but they have been actually purchased from the FX market. A very important change in our economic landscape is the increase in remittances. So our remittances that were hovering around 30 billion during the period of FY20 to FY24 increased very substantially by about 8 billion in FY25. So in FY25, the remittances were 38.3 billion as compared to 30.3 billion in the previous year. This year, our expectation is that we would receive remittances of around 41 billion. Out of that, actually 34 billion we have already received during the first 10 months of this financial year. And because the current month there is a Eid, and during the Eid festivals, there is a very substantial jump in the remittances that we receive. Just to give you a comparison, during this 10 months of this current financial year, the remittances that we received was around 34 billion, and our trade deficit, both on account of goods and services, was 29 billion. So the remittances are good enough to balance that trade deficit, and that is the reason that for the last 10 months, our current account deficit is 252 million, which is more or less neutral. I will also like to highlight here that when we passed through very turbulent period in FY 21 and 22, we had to put in place certain restrictions, and at that point in time as well, we actually came to this this place, and we explained the reasons because of which certain restrictions were imposed on imports and certain other effects of flows. But even at that point in time, when we were seriously struggling, our reserves were, as I just explained, were very low. $3 billion is of course is a very alarming level. But even at that time, we made sure that the contractual payment of the government of Pakistan as well as the private sector are honored. So in terms of, for example, debt servicing, we made sure that there is not a delay of 1 day. Similarly, we made sure that the people who have invested through Sakra, if they want to withdraw their funds, and there was substantial withdrawals, we made sure that those funds are remitted without any restriction or without any delay. And we also made sure that if there were any outflows from the RDA, then those funds should be remitted hassle-free. We actually advised the bank that they should make sure that there is no delay, because even if because of the operational reasons there are delays and the situation is stressful, then the investor can actually think that the delay is because of certain other restriction. So as Dr. Syed Amar Ali explained, that we have received so far around $12 billion through this RTA channel. Out of that, around $2 billion have been repatriated back, and part of it was repatriated during that stressful period. But we made sure that those are repatriated freely, and many of actually those people, they then again brought back those funds and invested again in RDAs and Pakistan certificate. So I just want to actually sort of convey our commitment towards ensuring that the money that is invested in RDA is safe. It can be repatriated at any point in time. Dr. Syed Amar Ali also explained that while, of course, you can encash it at maturity, if you want, you can encash it before maturity as well. And you will also get a return. For example, if you invest in a 1-year instrument and you want to get funds, may say, for example, after 6 months, then you will get a return of 6 months instrument on that premature withdrawal. So I think, and I will not reiterate the salient features and the other areas, other factors that actually sort of we would like to explain that why the people should invest in these RDAs and the NPCs and other avenues that are available through these schemes. So I would like to conclude again. Thank you, OICCI, and thank you, Meezan Bank and Yusuf. Thank you very much.
Thank you very much, Dr. Naid Saab. I think a very strong reassurance from the State Bank now in terms of that, the way he explained the whole the story behind how the currency fluctuation has been, and the way he has now told us that the confidence that the State Bank is giving to foreign investors to come in and invest in the RDA2 product. So thank you very much once again, Dr. Saab. We would now, before we conclude the session, we'd like to open the floor for some question and answers. As I'd requested, we have notepads on the sides. People in the hall, if you would like to ask some question, kindly put it on a piece of paper and share it with us. We have received some questions from our online social media platforms. By the time you contribute those questions, we will ask the questions that we already have. And then if time permits, we'll take your questions right now. Or, like I had said, that somebody from either Faysal Bank or Meezan Bank will come back to you and respond to your respective queries. So all queries will be answered to. So moving into our question answer session, the first question that I have from one of the social media platforms is for Mr. Yusuf Hussain Saab. So the question is that which type of foreign corporate entities can now invest through the RDA 2.0 framework, and how will that help expand the investment platform in Pakistan?
I believe this is really a welcome step by the central bank in terms of opening it up for people belonging to Pakistan, holding foreign passports, and even generally as investors. So a lot of our companies, especially exporters, keep some money outside Pakistan. A lot of our companies have ventured in the international markets. So I think that sort of opportunity is available for them, that they can actually park their dollars into the country. And it's truly really sort of globalizing and providing easy access to international investors as well, in terms of easy inflows and outflows. And that is like moving away from a regimented or a restrictive foreign exchange regime into sort of an open market and opportunity in terms of quick investments and in terms of slightly longer term investments, like in the sukuks, like in the equity markets as well, and benefit. So I think that convenience to a wider target audience in terms of the investors, I think that is very important, and that's why the State Bank has opened up for other investors as well, other than individuals. And that should hopefully, as the momentum picks up, inshallah, would have a positive impact in terms of building up the RDA reserves further.
Thank you. Thank you for that answer. The second question I have is for Mr. Imtiaz Gadar. Imtiaz Sahab, the question is that with foreign nationals and entities now eligible for RDA-based investments, what new opportunities do you foresee in Pakistan's capital markets and mutual funds industry?
So I think should look at it from the perspective that, as I said, Pakistan is on the map for the right reasons. And I think in that, I think it's also very well timed that what we've done is that we've complemented that by ease of access for institutional investors. So that's, as Amir Saab was discussing in this talk, that why this is a little more efficient than what they generally face, and why this is also beneficial from a currency risk perspective. So I think this will be very good in terms of the timing. For me, the most impressive thing has been the timing, that it's well timed. People are talking about Pakistan, and at the same time, we've opened up a new avenue, that this is where we can easily come into Pakistan. And as I said, from a mutual fund, the mutual fund part of the question, obviously for people who do not have that Pakistan expertise and would want to delegate that work to mutual funds, I think it's excellent for them.
Thank you. Thank you very much. So we have, we're getting a lot of questions, especially from our social media chats, and, the comments are inning. I think we'll take one or two more questions before we end today. My next question is for Dr. Syed Amir Ali. Amir Sahab, in your view, what has been the biggest success factor behind RDA's growth in Islamic banking? And how is Meezan Bank supporting this momentum?
I think the question asked by somebody is informed that, interestingly, there is a significant interest by specifically non-resident Pakistani into Islamic Naya Pakistan certificate version. RDA is opened with Islamic Bank, and Meezan Bank from day one invested actively into this value proposition when central bank provided this new regulation and a platform. So Meezan Bank now have a dedicated RDA center where there is an operations team, there is a relationship team, there is a technology team. They all work in sync to give a service to the customers, and a result of that, plus because of their own faith reasons, and then followed by a seamless solution and 24/7 customer service, we have been able to handle 29% of the RDA remittances coming into Pakistan. Even during last month, we received $320 million in RDA remittance. As of today, Meezan Bank is holding 62 billion rupees in RDA deposits, and there are 163,000 customers, and roughly 163 billion rupees has been invested into Islamic Naya Pakistan certificate through our counters. So I think there is a massive traction on the Islamic version of all these instruments, and it is a natural demand which is coming in. So the only need for banks in Pakistan is to service those customers.
Thank you. I think, yes, very aptly put that. I think the most important piece is the servicing of the accounts and everything. Okay, so in the interest of time, I will have one more question. This last question is for Dr. Inayat Saab. Dr. Saab, I know you've emphasized on it, but there are still, people who'd want to know a bit more. The question is that confidence is the foundation of any investment ecosystem. Given global economic uncertainties and concerns around Pakistan's reserve adequacy, what message would the State Bank like to give to overseas Pakistanis regarding the sustainability and future outlook of the Roshan Digital Account initiative?
Thank you. So I was actually feeling offended that no one is asking me any questions. So thank you for this question. So to start with, one is I think the past. So as I just explained, that even when we hit rock bottom of $3 billion in our reserves, we still honored our commitment both to the creditors as well as to the people who had invested in RDA. So that is one. The second is that I've just explained a structural shift in remittances, and that has been brought about by very substantial reform in the exchange companies sector, and taking a number of other measures that have then ensured that the flows are diverted from informal sector to the formal sector. And our expectation is that we would continue to experience a growth in remittances. The third is that in terms of the situation in Gulf, of course, it is very uncertain, and it is very volatile. We have seen oil prices exceeding $120. We have also seen the risk premium, the freight insurance has increased very substantially, and we have also seen our oil import bill that increased. Our last month import were about $1 billion more than the same month in the previous financial year. But despite that, as I shared with you that during the last 10 during the first 10 months of the last of this financial year, our current account deficit is just around 250 million. Our expectation is that this situation would be resolved in near future. And if it is resolved in near future, while most of the projections are that the oil prices would remain at elevated level, but of course they won't be at 100 or $110 a barrel. So they would come down. But there is also expectation that the oil prices actually may come down much more substantially than most of the people are expecting because of the geopolitical reasons. Right. If, for example, sanctions on Iran are removed, then we may see a very substantial increase in the supply of oil. But even if this conflict continues for some time, we are still reasonably sure that the buffers and reserves that have been built up, should be able to sustain that situation.
Thank you very much. I think so. That brings us to an end on the question and answer session. Unfortunately, due to limitation of time, we have a lot of more questions that are still coming in, but like I said, they will be responded to at a later time by the bank representatives. Okay, to bring this powerful session to a formal close, I would now like to welcome the Chief Executive and Secretary General of OICCI, a leader who tirelessly champions for the cause of foreign investment and the economic development of Pakistan. Can I please request Mr. Mohammad Abdul Aleem to join us for the closing remarks?
Yes, Assalamu alaikum. Thank you very much. This is very surprising for me because I wasn't asked to be ready for this. But anyway, I think it's a very warm welcome to Dr. Inayat and the State Bank team. I think the initiative is highly appreciated. I mean, I think one sector which was not discussed is basically the foreign investors, issue that they have. I mean, Dr. Inayat mentioned about this crisis that came out in 2022 and 2023. We were a regular visitor to State Bank, and the governor and Dr. Inayat gave us patient hearing. And to the extent that they could, they did help us. And I think this initiative, I think, the way we see it, I think it's not only for individuals. Overseas Pakistanis, I think, is for the corporates. And I think we would take this forward with the OICCI members, because I think they should take interest, and there are opportunities, even in, just to inform you that when we were in the big crisis back in 2022, 23, two multinationals requested State Bank that allow us to open RDA accounts, and we will bring more than $500 million and keep it just to strengthen the reserves and to convey the message, because their headquarters were also getting, the feedback going from Pakistan, and countries like Pakistan were affecting their position in their host countries. But obviously, these type of decisions are not taken at this point of moment. So anyway, thank you very much. I think a very interesting session beyond expectations, and it's a pity that time didn't allow us to handle all the questions, but I think the connections are available. So we would also, on our part, will do whatever we can to promote this. Thank you very much, Yusuf Saab. Thank you, Amir Saab. Thank you, Dr. Inayat, and Imtaz Gadar. Thank you. And may I invite you to some photo sessions also? Yeah, and yes, okay, because we are a nice host also, so okay.
Thank you very much, Aleem Saab. Can I request Yusuf Hussain Saab the President, CEO, and as President of OICCI to please present a memento for today's evening to Dr. Inayat, please. Can we have the thing? Bahar. Thank you very much, everybody, for joining. Ji, we'll take a picture on the stairs outside, and then we will move to the foyer area on my right for refreshments. Ji. But this brings the session to a close. Thank you very much, everybody, for joining. Khuda Hafiz. Ji. चलें यार